Hi, good afternoon, everyone, or good morning. Welcome to Acclaim's Exploring Fintech Ecosystems in Asia webinar. My name is Vlad Savin, Head of Business Development at Acclaim Vietnam, and I'm excited to speak together with a group of 4 panelists today about the ecosystems of the fintech sector in 4 Asian markets. Really exciting to have a distinguished panel of speakers today and a few presentations from their side, including discussion happening afterwards. So let's wait for attendees for a few minutes to log in. I already see we have quite a lot. And I'll first start with guiding you a bit on the technicalities of the webinar and a few notes on the agenda and on the speakers, and then we'll continue with the next session. So a few details about Acclaim. Acclaim is a Asia-focused professional service provider. We look after foreign investors that are interested in the Asian markets and enable them to be successful and to be protected as well. We have jurisdictions across 14 countries and territories across Asia. And we're looking forward to supporting you with not just the fintech component of your investments, but with many other sectors and areas. Few details on myself. I've been in Asia for close to just a bit over 10 years. I look after foreign investors looking to enter Vietnamese market and as well supporting the group business development with various initiatives related to events, webinars, and general understanding on how investors access and become successful in Asia. On the specifics of the webinar, we'll try to make this as interactive as possible. As I mentioned, we'll have presentations from the 4 jurisdictions coming up soon. But if you have any questions during those presentations, feel free to either raise your hand and interact directly with the panelists, or write those questions in the Q&A. We'll get to all of them after the presentation sessions. A few details on Acclaim Fintech Week. It's the webinar that we're just presenting now is part of the Acclaim Fintech Week. It's a thought leadership project that looks into providing from 11 to 17 of September information that is relevant for investors interested in fintech markets in Asia. So if you follow our LinkedIn or our online channels, you'll see quite a lot of expert information, starting with infographics, insights, events, and many other articles that relate to the fintech ecosystems in Asia. And a few notes on the panelists that will be presenting today. We'll have Thomas Chan, Partner and Managing Director at Acclaim Singapore. Thomas has been advising international investors for over 20 years under Big 4 firms and across various jurisdictions, including Australia, Indonesia, Myanmar, and Singapore. Recently, his focus is on Singapore, providing clients with practical solutions based on multi-jurisdiction investments. Blair Lucas is a Group Commercial Director at Acclaim Australia and co-founder of Acclaim Australia. His professional experience is focused on startup phase through exit investments. He's also looking after the entire commercial component of the Acclaim Group, essentially all the 14 jurisdictions, including United States offices and Europe offices as well. After that, we have Karim Saleh, a partner and country head at Acclaim Indonesia, with over 35 years experience in consulting, ICT, technology sector, and as well payroll management, business processes, industries. And Matthew Lowry, Managing Partner at Acclaim Vietnam, has been residing in Vietnam for just a bit over 19 years. Also with Big 4 experience, focused on specifically advising investors in Vietnam with the practicalities of the market entry, structuring, and as well maintaining compliance from a statutory, corporate secretarial, and tax structuring perspective. Just one more minute, a few more attendees joining in lately. So as I said, we'll start the presentations in this order, 5-7 minutes for each of the panelists, introducing specific market elements about the fintech ecosystem in Singapore. Then we'll go to Australia, follow up by Indonesia and Vietnam. If there's any questions on these markets, please feel free to use the chat function or raise your hand, and we can potentially activate your microphone. After that, for the last 25 minutes, we'll have an open discussion, panel discussion with the speakers to ensure that we can have that cross-border understanding of the fintech potential in Asia, looking at all these jurisdictions combined and understanding practicalities in each of these. In any case, this is a recorded session. We'll send across the recording as well. And all the materials shared as well in this presentation will be emailed to yourselves in a follow-up email shortly after. All right, so I think we can slowly start with the first jurisdiction. Thomas, if you can turn on your camera and your microphone, welcome, and please share your presentation.
Thanks, Vlad. Good morning, good afternoon, good evening, depending on where you're dialing in from. Just give me a few seconds to share my screen. Excellent. Vlad, can you see it?
It's all good.
Very good. Thank you. So good afternoon. Welcome from the little red dot in Singapore. So for those of you that are not so familiar, Singapore sits right smack in the middle of Southeast Asia. We're a tiny little island, but we like to say that we typically punch slightly above our weight. So Singapore is a financial hub in many sense of the word for rest of Asia. We're also a significant wealth management hub. Most of our international and regional banks are well represented in Singapore. What you will see in recent years is also that many of the family offices, as well as fund management companies, would have sizable presence in Singapore. Many of the MNCs would typically also have their regional headquarters. It is also a very well understood and often used, hang on. There we go. Sorry about that. Very well and often used holding location for many of our clients' holding companies. What typically that means is that we do have many of the companies establishing their regional management teams in Asia. And as a result of that, you will see that we also have a very popular airport, which makes it quite easy for executives to be zooming across Asia. Legal infrastructure-wise, we inherited most of the English law, but we have been working quite hard in terms of modernizing it. The Singapore legislators quite often update the legislation just to keep pace with a lot of the changes. So as you can see, Singapore has sort of transitioned from a sleepy little town to sort of a modern city over the course of the last 2 generations. There's a relatively high GDP per capita, but there's much of the infrastructure that's there to support the growth initiatives within Singapore. Keep in mind, however, that Singapore is a relatively small island with a not that big a population. What that means is effectively we do attract, for example, many fintech startups. So just in 2022 alone, we see 499 of them coming into Singapore. We have a very broad coverage from digital payments, lending, insurance, wealth management, digital trust, digital assets, and many others. But typically, they have a very clear reason why they're establishing into Singapore. It is one of the key areas in which they start to launch their products into other parts of Asia. As a result of that, Singapore already has a very popular fintech festival. It's well attended in the 2022 version, and this is shortly after the also very popular Intersect in Australia, with 62,000 participants from 134 different jurisdictions. So from a talent pool perspective, as you can imagine, with a small population size, we have many of the investors relying on local as well as foreign talent pools, and Singapore continues to manage them. But more importantly, from a robust fintech scene, we can also see that the wealth management industry has also been a key player in making sure that many of the fintechs find it a lot easier to seek funding. So from a development perspective, one of the key points is that Singapore, being a well-known location, why? Primarily because Singapore does not have capital gains tax. So it makes it popular for investors. Many of the investors or fintech startups would find that it's a lot easier because there's a lot less due diligence when they set up in Singapore, when they do need to raise new debt or equity. We can have a company being set up in Singapore over the course of a few hours, of course, given the documentary requirements being prepared in time and on time. Overall ease of doing business is always up there amongst the top in the world, and the government is always looking for new ways to make sure that Singapore stays competitive. So from that perspective, there's a ongoing regulatory reform, and one of the key so-called cornerstones, I think, is that they have established the Fintech regulatory sandbox. A little bit more about that later. So I think from an overall perspective, what you will see when the Singapore government is trying to transform Singapore into the smart financial center is that it takes a very proactive approach in making sure that itself understands the fintech sector well, right? And in doing that, there's several things in which it does. So what you can see is that it also already has a digital platform which sort of encourages the data sharing between our traditional financial institutions, which is well established in Singapore, as well as the fintech companies. It also goes one step beyond that. Those of you that have kept in touch with the news in terms of Singapore's fintech development, you will see that the MAS, the Monetary Authority of Singapore, has taken great pains to also establish a trial with Canada in making cross-border payments using a DLT technology. So, from their perspective, they take the mantra that effectively, if the best way for us to learn is really to ensure that it tries itself or applies itself in terms of what it's able to do, so that it can take a much more balanced approach when regulating the fintech industry. So, for example, in terms of the sandbox, in making sure that Singapore is able to allow many more innovative products and services, especially in the fintech sector, to launch in Singapore, they have developed this fintech regulatory sandbox. What that means is that when you do have a new product or service that you would like to launch in Singapore, and it is relatively unclear in some areas what you can and cannot do, and what sort of regulations would need to be applicable, you would be able to speak to the regulators in order for them to sort of understand the product a little bit easier. And then thereafter, you can launch the product or service in a limited fashion with certain guardrails, so that in a live sort of scenario, the regulators will allow that product to go live. With that sort of test information, then clearly the regulators get a better understanding of the product or service. They can then come back and refine that process. So as you can imagine, it's a much shorter life cycle, which allows both the regulators as well as the fintech companies to go through and refine their overall process and guardrails to make sure that both consumers as well as the are protected, but also shortens the life cycle for fintech companies to launch their products and services. So by and large, really making sure that from a regulatory perspective, the MAS is seen as a strong supporter of the development of the fintech sector within Singapore. But on top of that, what you realize is that not only the MAS puts forward its support, you have multiple different agencies which helps to look after the development of this sector. One of which would be the IMDA, the Infocom Media Development Authority. By its very name, you would not think that it takes an active part in terms of fintech, but actually what it also does is that it takes care of the ecosystem development programs like the Tech Skill Accelerator, the Open Innovation Platform, accreditation, and the Spark program. And then, of course, there is the EDB, the Economic Development Board, which I think most other investors would be more familiar with. This is the government statutory board that looks after the issuance of incentives in making sure that Singapore stays competitive as an investment destination. And then lastly, in terms of the Enterprise Singapore. So this is another government agency which typically champions enterprise development. So they work with SMEs to make sure that from a global perspective, the enterprises that are starting out in Singapore would do well when they are expanding overseas and to be very much more competitive. So with this in mind, clearly Singapore has a very clear goal. It really wants to be the launch pad for many of the fintech companies into the region. To that extent, it also takes a proactive stance in making sure that it signs collaborative agreements to make sure that the expansion between after Singapore is a lot smoother and supporting the growth of the fintech after it launches many of the products in Singapore. Okay. And then from a market perspective, clearly Singapore is Singaporeans and the Singapore market already accepts fintech very well. As you can see from a analytics perspective, 68% of Singaporean consumers already prefer to work with digital channels in engaging with their bank. This allows them to really make sure that many of the products are more easily accepted by the general population. To the extent that Singapore's wealth management industry is also engaging the fintech to make sure that there is automated investment advice and portfolio management services to be available to retail investors. And Singapore is one of the few locations that has launched digital-only banks. So as you can see, it's a good location if you're looking to launch your fintech startup and subsequently, scale up into many of the other jurisdictions which are nearby in Singapore. And of course, Singapore still needs to continue to refine its attractiveness to make sure it stays competitive with the many other choices and many other countries which are trying to compete for the fintech investment dollar. Okay, so I think that's probably the short overview in terms of Singapore's landscape for fintech. I'll hand over back to Vlad. Thanks.
Thank you, Thomas. And very interesting to see the Singapore regulatory fintech sandbox activated and providing value for investors. In Vietnam, we're not at that stage yet. And I think Matthew will share a bit later some of the details about the sandbox for Vietnam. But before we reach Vietnam, we'll have Blair Lucas representing the Australia ecosystem. Blair? Can you share your screen?
Yes. There we go. Hopefully you can all see that.
Perfect.
Wonderful. Good afternoon, everybody. I'll be brief because I want to make sure we have a good and productive discussion. I'm coming to you from sunny Melbourne in Australia, a little bit later in the day than most of you, unless you're based over in Europe or UK. It's interesting always following up from Singapore, because that's in fact what a lot of our clients end up doing. Going to Singapore, establishing a hub there, and then coming down to Australia. But there's also quite a bit of, for lack of a better word, competition between Singapore and Australia, because in fact, many of the advantages that Thomas just outlined in respect of Singapore also exist in Australia. But for different reasons, these markets have different levels of attractiveness. And I want to run through where Australia is slightly different in some ways to what Thomas has already explained with Singapore. There we are. All right, so here are the fundamentals very quickly. Look, everybody always positions Australia as a doorstep to Asia for growth. And much as Singapore provides that hub, Australia is doing a lot of things like Singapore in terms of creating strategic partnerships with other countries in the region. And not surprisingly, we have a fintech bridge with Singapore for particularly this reason. But we also find that Australia acts as a really good test bed for fintechs that want to expand into other Western markets. So a lot of our fintechs coming out of Asia use Australia as a test bed to refine and develop their products or services before they scale into markets such as the UK or the USA. Of course, we also here have strong and supportive regulatory environment and policies, I beg your pardon. It's a highly regulated market down here, which does lead to some challenges, and we can certainly discuss that later. But the existence of the open banking regime in Australia off the back of the very successful launch in the UK has meant that there are lots of opportunities for fintechs who wish to tap into that. There is also, due to the existing incumbent banks in Australia, largely having a lot of legacy issues, they're very, very keen to engage with fintechs to modernize their services, modernize their products. Australia has a very high penetration of population who bank digitally, and the population is very digitally savvy. Australia's banks are regarded as the best capitalized in the world, the most profitable. I can certainly tell you they're the most profitable. Australians themselves, everybody's on mobile phones, everybody's engaging digitally with banks these days. And so the banks themselves, these old dinosaur banks, the four majors in Australia, are often looking for opportunities to collaborate with fintechs to do so. Of course, like Singapore, you have a really high quality talent pool, and the universities are very highly ranked in the world. But again, like Singapore, the fact that we don't have a massive population here, 26 million, means that access to talent can sometimes be also highly competitive. Now, of course, we do have strong economic growth here up until the most recent COVID recession, if you're going to call it that. I think Australia had the longest stretch of economic growth of any Western economy in the world, with close to 30 years of no recession. So it is a strong and lucrative country, and that does allow for opportunities here if you're going to use it as a base to also generate strong financial performance. And of course, worthwhile mentioning is that in Australia, we have a not necessarily very well known, certainly well known in some sectors, but a very generous R&D incentive, which is that if you conduct R&D in Australia and you're a small business, you can access a 43.5% cash rebate on your R&D spend in Australia. And a lot of companies in the fintech space are coming to Australia just to enter this market, but also to access that very generous incentive. So here we go, just briefly on the Australian fintech ecosystem. Second in the Asia Pacific as a fintech hub after Singapore, as I said before, and sixth globally. It's a $10 trillion financial sector here. And importantly there, within our superannuation funds, which are the pension funds in Australia, there's a $3.5 trillion worth of funds. And that gives opportunities both in terms of raising capital here, but also because those superannuation funds themselves often wish to engage with fintechs. There's more than 800 fintech companies here, of which 160 are foreign owned. So there's not a whole lot of foreign fintechs here, but 160 out of 800 is certainly sizable. And as I've said before, consumers are early fintech adopters. Australians are number 2 in the world, least likely to use cash. We use our phones and digital payments for almost everything in Australia. And number 3 in the world in terms of 5G connected devices. Now, the regulatory environment, we talk about this a lot in Australia because it is both a hurdle and an opportunity. The growing demand has led to government policies that encourage innovation, but at the same time, the Australian government is keen to make sure there is strong regulation in place to protect consumers. So licensing requirements in Australia are very, very broad. They cover a broad range of products and services, We often have clients who come to us who say, no, I'm sure I don't need a license. I don't need one at home. And I guarantee that in Australia, that's almost certainly going to be inaccurate. So as we always say to everybody, it's essential to make sure you get good guidance on whether you are subject to an Australian financial services license or an Australian credit license. And that's simply because they can be quite expensive to obtain, but also they can be time consuming. They could easily take 6 months to obtain. So you need to know that before you come into market and then realize you can't trade for 6 months until you get that license. But the regulatory environment is very stable, and those policies that encourage innovation, much like Singapore, we have the enhanced regulatory sandbox, called the enhanced regulatory sandbox because it's a new iteration of the old one. And again, much as Thomas explained with Singapore, this allows fintechs to test out their products here without first obtaining that license. So engaging with the regulator, getting their feedback on whether or not you're subject to any kind of licensing regime. And also, as I mentioned before, the consumer data rights, which are our version of open banking, which again has allowed for a much easier access for fintechs into that kind of data to be able to sell their products in market. I think I'm quick today. That's all I've got. Thank you very much for your time.
Thank you so much, Blair. And very interesting to see how to hear you mentioning about the regulatory environment in Australia, that it's a hurdle and a benefit as well. And it's indeed for investors, they want to be protected by the regulations, and as well, sometimes there can be too many of them. And it's interesting how investors navigate these two areas of the system. All right, I think we can move towards Indonesia. Karim, can you turn on your mic and video and share your presentation?
Hello, thank you for that, Vlad. So good afternoon. I'm Karim Saleh. I'm sitting in Acclaim Indonesia's office in Jakarta, which is 7 hours ahead of GMT. So a very good morning or good afternoon or evening to you in your respective time zones. Today, I will be sharing an overview on the fintech landscape in Indonesia. Also touching a bit upon the fintech ecosystem and the regulatory framework that governs the fintech industry here in Indonesia. Okay, so to give you a bit of an overview, in the recent years, Indonesia has become a thriving fintech hub with a rapid expansion of the digital services with enthusiastic investors and participating in the fintech industry, covering a population of 280 million people. Wait, I need to fix a screen problem that I have. Okay, got it. So sorry about that. So adding to that, there's a limited financial access for the micro and small to medium-sized enterprises. This also has prompted the government to take proactive steps in leveraging fintech to bridge these financial gaps and to this particular sector that is contributing to this sector's expansion. Over slightly more than a decade, Indonesia has witnessed an explosive surge in fintech players, growing from roughly around 50 in 2011 to now nearly 350 in 2022. Payments have dominated the initial phase, and today's ecosystem spans diverse sectors, including lending, payments, wealth management or wealth tech, and fintech-driven software as a solutions and insurance. On the investment side, the confidence of investors remains robust. 2021, we saw funding surge to $1.5 billion. Payments have been leading the receiving end of the investment, but we are also seeing wealth tech doing pretty well, securing over $500 million US dollars. 2022, despite the global economic uncertainties, Indonesia still attracted nearly 1.4 billion US dollars in funding, which demonstrates the fintech's resilience during the across the COVID period. Whereas 2020 to 2022, the total investment in fintech reached an impressive 3.2 billion, which is a close to five-fold increase from the period of 2017 to 2019, and 60% of the investment supported early stage fintech firms, highlighting a strong appetite for emerging innovations. Okay, so if we talk about the landscape, it continues to strive with a very dynamic digital ecosystem that integrates financial services into established product networks. The integration covers a wide range of fintech sectors. These sectors include B2C commerce, e-hailing and general delivery, B2B commerce, and fintech software as a service. Within these sectors, we see effective incorporation of diverse elements, which includes payments, lending, wealth management, and insurance. The integrated fintech approach has become a powerful driver for growth within the digital ecosystem, and has found fertile ground in Indonesia's vibrant ecosystem. One good example is the e-hailing sector, where we see players in this sector providing financial products such as B2B lending. This particularly mostly offers the working capital for or loans for drivers, and B2C lending with BNPL or buy now pay later options, and even travel insurance. This has also, this integrated ecosystem has also given rise to the digital banks in Indonesia. Now let's have a look at some of the key players in the Indonesian fintech sectors. Most of these are household names, of course, and I highlight these ones that have achieved unicorn status in an average of 4.5 years after their incorporation. First would be Gojek. This is the ride-hailing company, which was founded in 2010. As a transportation app, it rapidly expanded its services to encompass food delivery, commuting, digital payments, shopping, hyperlocal delivery, and more. A sister company that they developed is GoPay, which is a digital wallet or payment. And this was developed to support its on-demand services for Gojek. And they offer a range of features, which includes cash payments, balance transfers, withdrawals, and transactions with various different merchants. Another notable unicorn is Tokopedia. It's an e-commerce in the e-commerce sector. This backed by significant major investors and have diversified its offerings to include many different electronic products, fashion products, household goods, and the likes. And they achieved valuation status, valuation of $7 billion in 2018, which and showcases 100 million products with a range of, I think, around 9 million sellers registered to them. So interestingly enough, these two key players mentioned earlier, Tokopedia and Gojek, have merged in 2021 to form what is known as GoTo. It's the largest digital ecosystem in Indonesia, which quickly reached an impressive valuation of over 18 billion within a very short period of time. The others, I'll just go through quickly. We have Tokopedia, Traveloka, which is a travel and lifestyle, provides a one-stop service for travel needs. Digital wallets such as OVO, and we have B2B payment sectors such as Zendit, and wealth tech like Ajaib, and of course, last but not least, is Dana, is a prominent digital wallet or payment provider. Okay, let's have a look at the regulatory framework in Indonesia. So establishing a fintech business in Indonesia requires compliance with quite a complex network of regulatory bodies. which operate independently. However, they do collaborate to ensure consistency in fintech industry policies and standards. Notable ones are the Ministry of Communication and Information Technology, or we know it in Indonesia as Kominfo. They focus on digital innovation and data protection and cybersecurity. The next notable one is the Indonesia Stock Exchange. This is relevant for fintech IPOs and collaborates with the Financial Services Authority, OJK. Next is the DGT, or Director General of Tax, oversees the taxation matters. Of course, we have to be tax compliant. And the Ministry of Trade. This is relevant for fintech involved in e-commerce. Now, I'm saving the best for last, which is the two most prominent regulators. The first one is the Bank of Indonesia. This is a central bank and plays a very central role in overseeing payment systems, digital currencies, e-money services, and it sets the regulations for payment processors and digital finance innovations. BI guidelines also provide a foundation for other regulatory bodies, and in this case, relating to fintech. The other primary regulatory authority is the OJK, or Financial Services Authority, which regulates all fintech that provides financial services, such as digital banking, P2P lending, crowdfunding, insurtech, and market aggregators. Okay, so this is all for me now. Thank you very much. And I think I am also on spot with timing. Back to you, Vlad.
Appreciate you sharing, and we'll get back to some interesting questions in our panel discussion in the next 5-8 minutes, because Indonesia is indeed an exciting market. In the last 5 years, it did have quite a significant growth, similar with the Vietnam's growth potential. So thank you again, Karim. Matthew, over to you.
Fantastic. We got this working. Perfect. So thanks for that. I'm going to be quite quick. I know I'm last, and we've got between myself and our discussion. So I'm going to flick through some of these slides quite fast. Everyone will get a copy afterwards. So Vietnam's got a great, amazing story. 100 million people, 72 million internet users, smartphone users, broadband subscribers. So whatever metrics you're looking at, it's quite a sizable market. It's a very digitally connected market, and it's growing. It came from quite a low base, and it is growing fast. Unlike when Blair was talking about Australia's growth was quite good through, other than COVID, Vietnam has had blips, but it's grown constantly, and its growth is still growing at a significant pace. And we're seeing the connected community, the tech industry growing at similar rates at 6 to 6.5%, is really, is consistent with what we're seeing in the economy growing as well. There's lots of opportunities in Vietnam, and digital infrastructure, startup scheme we'll touch on in a moment, and tech savvy population. So a lot of things. It's not all roses. You can see down there that 86th in the e-government index, we're lagging, but there's opportunity in there. And there is, where Vietnam sits, there is a great opportunity to take advantage to help move along. So some of the negatives that are actually positive for fintech is we're relatively unbanked. I think it's more underbanked there, but you still got a significant portion is looking for the next stage, and obviously fintech fills that gap in many cases, and we're seeing that actively in Vietnam at the moment. And it really is, other than after Singapore, Vietnam is the sort of highest growth rate in the ASEAN region, at least, about what's happening in the fintech sector. And Vietnam is definitely providing a lot of the back end development, if not the front end options, across the region. 7 quick drivers here. You've got a middle class. You've actually got quite a young, but a middle class with some money growing, and that gives sort of population density and size. Relatively tech savvy. From a banking perspective, Vietnam skipped over checks, for example, went straight to sort of more online transfers and direct transfers, and now moving into that pure fintech space. E-commerce has been adopted in recent years, online purchasing, everything can be delivered, and that's encouraging a lot of the development. the geographies of Vietnam and how the actual workforce is definitely plays in our favour. Governments pushing digital transformation, and mobile phones, as most countries, are ubiquitous. In fact, I think there was 135 million mobile phones connections for 100 million people. So the number of people with 2 mobile phones is still significant. You can also see the growth. So we don't have, unlike Australia, saw some numbers in other countries, we only have around 260 fintech companies, but that's off in a very short period of time, that's grown significantly. And we're moving towards the non-cash transaction values up the value chain, but it's an opportunity because Vietnam has the second largest population, more than Philippines, Thailand, but we're still not there yet. But that's what's changing, what's growing. So opportunities for the market. You're looking at where the money's been going. You're looking at payments being the main one, but data analytics, wealth management, lending coming through. Insurance is actually kicking on quite a big way in recent times as well. So money's going quite across the board, and we've still got we're seeing the startups we're looking at the digital payments, personal finance, B2C, insurtech, alternative finance. We're seeing this as a lot of opportunities coming into market to take advantage, and it's less painful in some ways. It's like all the countries, there's pros and cons. To start in Vietnam, it actually is not that hard. To get fully licensed is really difficult, and that's where there's a grey area, but also sort of fertile ground in some ways for people to come in and start up. In Vietnam, you can only undertake activities within your business lines. You must have approved business lines. These are in line with some commitments that Vietnam has in WTO. Some of them are completely open. Some of them require local ownership in portions, and some require significant post-licensing. Generic tech is unrestricted. Foreign investor can come in, start a company tomorrow, not quite like Singapore and takes a day. It does take a number of weeks, but you can set up, and that's what a lot of entrants do. They set up a tech company and then move into the fin space. So fintech, edutech, and those sort of things require approvals, and that can be quite challenging sometimes. But the technology coming in as a tech company and then moving, improving the product and going into a sandbox, or going into, which we have a sandbox like the other countries, or going to a regulatory process or a joint venture with another party that has a regulatory basis, a bank or similar. Generally, investors have a resident legal rep, a lease in Vietnam, and enough money to prove they can do the business, and foreign documents. It's not overly complicated. Your capital for a technology company might be $20,000 as your commitment to a foreign investor to enter Vietnam, but that's your money to use. The barriers are not high for the startup phase. You run 3 processes, 5 or 6 weeks, you can have your company set up, get the investment approval, get your certificate of incorporation, and get your seal publication. That's not too bad. Where the problem arises and where the difficulty, as I mentioned, is the actual licenses. So fintech itself, you need to have generally a sub-license, or in some cases there is no regulation. So you're sitting in a grey area. Uber and Grab came into market without regulations as a tech company, and eventually regulation put itself around those enterprises. And that's how they evolved into their license situation, was actually a tech company with those evolution. A lot of these things, the payment provider license for the state bank is an unknown timeline, and it's working with them. It can take 2 to 3 years to get that license, may take a year, and that's an interesting challenge that they face. What a lot of parties do is they take their tech company and joint venture with a bank or an existing payment licensee initially as the start, and so they can get active in their business and eventually work out with the state bank their own path and their own license process. As I said, it can take a long time. It can take years in many cases to go that, and so even if it's a fertile market, you could be careful of your market journey so that you're not stuck and that you can push ahead and grow quite fast. So as I said, pretty much it's about entering the market, doing a lot of your development because it's a lower cost development location, great technology, great engineers. It's the proof of concept. It's potentially using sandbox. It's dealing with regulators, and it's joint venturing with others that have particular licenses that you may aspire to hold and to take advantage of 100 million people. And one of the very few economies that has not had recession or gone backwards in the past 30 years. It's been constant growth, and still lots of growth to happen. So there's my truncated version for the benefit. I'll stop sharing. And that back to you, Vlad, to give us time for some Q&A and for everyone to we'll throw around the country's pros and cons a bit more.
Thank you, Matthew. Thank you for the presentation. This concludes our session with the 4 panelists sharing the ecosystem keynotes. So I'll take this chance again to invite first the attendees to use the chat function or the Q&A to send across any questions they may have or interact with us through microphone live. And obviously, the panelists, please join me in a 15-20 minute discussion to understand a bit how these ecosystems interact with each other and see what opportunities may exist for investors in your ecosystems from a practical perspective. And I'd like to start first with the general question for all of you. Obviously, the maturity levels of these markets that you mentioned about are quite different, looking at challenges and looking at potential as well. Probably Singapore and Australia, they're more aligned, and then Indonesia and Vietnam still under development stage, but the growth is more significant in these 2 jurisdictions. Where do you see the biggest challenge for fintech investments in your jurisdiction? If you will have to pick only one challenge that it will create that significant point of which one would you choose, and what will be your let's say solution or potential practicality to tackle this challenge for investors? Anyone can start on this one.
It's a bit now. One of the interesting things, and it's that when it came to digital payment providers, there was a flood, land rush to get the payment licensing and to be first to market. There's too many mobile apps, too many mobile wallets, I should say, and we see that that's consolidating. So the trick to Vietnam is not being a mobile wallet. Now we're seeing payment providers change, and Apple Pay, Samsung Pay, but it's not racing to be one thing for everyone. It's trying to find a point of difference in the market, not being the same as everyone else. So most of those people that bought, I think it was 44 or something, basically mobile apps, mobile wallets that were out, 5 of them make money. The rest do not, and they just simply loss of development funds. They were trying to chase something that was unattainable, and we've seen them. Cause. So partner with someone who has something you need, develop something that's unique to market, find a point of difference.
And one of the opportunity there is that those 35 that don't make money, they may still have active licenses under their entities. So that can be an opportunity for investors coming in the market.
True. Claire?
I've got 3, but I'll be really quick. Money, talent, and a lack of regulation. Money's always a problem here. You've 26 million people. In fact, I'd be interested to have a chat with Thomas about whether there's deeper pockets available in Singapore. But you get to a certain scale in Australia as a fintech, and you go to the US to raise capital, simply because there's greater risk capital there. So capital, talent, as I mentioned before, great talent, but there's huge demand down here. I've got 800 plus fintech companies. And the third, of course, is lack of regulation. I say this specifically about crypto. Crypto is unregulated in Australia, and while that means you think it could give you opportunities, the banks won't touch you, the insurers won't touch you. So, in unregulated parts of fintech, it's really hard to actually achieve your business objectives in this market.
I think from a Singaporean perspective, it's more in relation to the fact that it's such a sizable volume of fintechs coming up. So effectively, it's really hard to stand out. So, you're basically awash. There are many people that are looking to invest, but at the same time, there's so many of them that are being set up effectively trying to attract capital as well as talent. Many of the same things that Blair mentioned. It's just that from a Singaporean perspective, the competition is really out there. And the speed at which they are launched really makes it a lot more challenging to make sure that they are able to stand out in the market.
I'd like to share for Indonesia. I think I have 3 in mind, but I'll highlight one, which is the regulatory complexity. I mentioned in my earlier presentation that there are multiple regulatory bodies, governing the fintech, and they do collaborate. However, it's quite complex. Yeah. So the multiple government agencies overseeing the fintech activities is quite complex. Although they do coordinate, but still, it is something that's quite challenging. Yeah. Not to mention regulatory changes can occur quite frequently, and it can be something that is disruptive. Um, what I would suggest is that investors should engage with local legal experts who are well versed with the Indonesian fintech regulations, stay updated with the regulatory changes, and building strong relationships with the regulators can help the investment activities. Other areas of challenge would be competition. There's a lot of players, and the competition is pretty high. And also, you'll be facing cultural and language difference throughout Indonesia. We have a population of 280 million and spread across 100 plus islands and with 700 local dialects. So it really depends on it really need to understand the local preference and customs, and this can be challenging. Okay.
We have a question from one of the attendees. Is there an opportunity for the tokenization of assets in the fintech industry? I'm not sure for which jurisdiction that may make sense, but probably Singapore, potentially. I don't know if you have information, or any of you.
Where?
Thomas, are you going to take this one on?
Yeah.
No, I Australia is what I mentioned before with crypto. Yes, there's an opportunity. Yes, they've done it, but it's become increasingly more challenging. Sorry, Tom.
No worries. I fully agree. I think in terms of the tokenization of assets, there are many different fintechs in Singapore looking at the tokenization of various different types of assets. But yeah, increasingly, of course, it does become a lot more challenging, and also because from the valuations to the investors, everybody is taking more of a tighter view in terms of this particular niche area of the fintech sector. So I think, are there opportunities? Yes, but I don't think that anyone has sort of found a very unique and marketable sort of market as of yet.
Thank you, Thomas. And since you're on the call, Thomas and Blair, question just for you, looking at the innovation drive in your jurisdictions, as they're obviously much more developed, and investors do have that support function from the authorities to create new projects, and they have that, let's say, experience with from a regulatory framework. Can you share a few examples on innovations or trends that you see in these jurisdictions that can potentially cascade into Vietnam, Singapore, or other Asian markets?
Yeah, briefly. I mean, one of the major innovations in Australia, it's not necessarily that new, but was the new payments platform, which was set up by the banks and the regulator together, essentially to create a platform for payments. And that's an example of really strong and really proactive innovation between the private sector and the government to create something that means anybody who has a payment solution or a payment gateway can literally come in and drop it on top of that platform. And that, in effect, means that you don't have to go through the same kind of regulatory pathway to get approval for such a product, because the infrastructure is already there. And they're doing these things a lot in Australia. I mean, we have immediate payments. Immediate payments up to $1 million over your mobile phone, which is crazy these days to think that, years ago that would have been a process of going to the bank. So there's a lot of that kind of innovation happening here. Tom?
Thanks. I think from a Singapore perspective, we do take a very realistic and pragmatic stance, in the sense that we understand that we're a very small country with very little people. Through all our current sort of education background, it's not going to generate hundreds and hundreds of fintech platforms. So from that perspective, Singapore's focus area is really in terms of building on top of our capabilities as a finance hub, and on top of that, also attracting a lot more of the talent coming into Singapore, making it very easy for them to move into Singapore, try out their ideas, put them on platforms, accelerators, and what have you, to make sure that they can seek and collaborate with the right sort of people, investors. And then from a regulatory perspective, I think that's really where the sandbox stands out, and let them try out. So in a larger volume, we're able to allow more of these people to try out their platforms in Singapore, and then subsequently we just need a small number of them to be extremely successful and launch into the broader region in order for Singapore to sort of, continue down that path?
That's right. We see for Vietnam significant number of Singaporean fintechs expanding into the market, and we're obviously trying to support them with the regulatory environment, which is quite a bit different than Singapore. And a question for Matthew. Lately, just 1 month ago, Apple Pay just entered the market in Vietnam officially, and it was all over the news. Do you see this as a significant sign that the maturity of the sector reaches a point where strong investors are able to come in and undertake profitable businesses? And how do you see this growing in the next few years from an investor perspective?
It's interesting for a number of reasons and not so interesting for others, but it's interesting that we saw a new player come in, get licensed. We don't know the timeline, but my understanding is it was not as long as we've seen with others. So yeah, if you've got the money, if you've got the ability to fund your entry, the regulator, you can discuss with the regulator and come in faster. Where I don't see this significant is Google Pay's been here for a little while, Samsung Pay's been here for 5 or 6 years. That's not new. Tap to Pay's been around, been integrated for a while. It's come on the back of that. Where that does, on the other hand, important is that Vietnam's been predominantly a QR-based, wallet-based payment process, and that's relatively clunky, and it gives opportunity for fraud. We've seen people put different stickers, different QR codes over things at destinations, and so it does move the needle when it comes to security and options and integration. And so it is anything like that which forces the other competitors to up their game and to move forward is good, because we see 5 or 6 different QR codes on a counter. We're not like China where there's a singular QR code. We're not quite there yet in Vietnam. And with Apple Pay, Samsung Pay's Tap to Pay integration and new entrants into the market is all part of the positive sign. And I think more banks, as they joint venture with others, but I think it's the easiest path to market, are going to be introducing similar tools and integrating with those current tools to move past the QR codes as the sole or predominant payment method.
Right. Thanks, Matthew. We're reaching close to the end, and I'll try to put a closing question on our discussion, one that focuses on more of an advice towards investors that are looking into your markets. What would be your key takeaway and key advice for international investors that are trying to access one of the subsectors of fintech in your jurisdictions, based on your, let's say, the last 3 to 5 years COVID impacted experience of the business environment and the tech and financial environments in your jurisdiction?
Maybe I'll take a quick stab at that. I think, given the large number of fintechs that are already in Singapore, if you are thinking about launching something within Asia or scaling up whatever it is that you have in terms of your idea, come to Singapore, have a chat with us. We can always, make sure that you chat with the right people in order for you to sort of test bed your ideas before you start, in terms of the overall process, just to shortcut the sort of life cycle.
Thank you, Thomas. Anyone else?
Yeah, I always just say do your homework, but I say that to everybody who comes to Australia, which is to say don't assume, that it's the same as it is at home. It comes back to that regulatory issue that if you are subject to a license, it can put the handbrake on your operations for a while. So do your homework, speak to professionals, find out exactly what's required so there aren't any surprises. You don't want to go back to your board and have to say, oops, I thought we were launching in January, but it's going to be July. So do your homework, get it right. You're going to have a much, much more satisfying experience.
And on the back of that, and I think it applies to every jurisdiction, but it's very good advice. Back to something earlier you said, Blair, was that, cryptocurrency, Bitcoin, for example, in Vietnam, it's not regulated and won't be regulated because support that it's a currency may impact the whole Vietnam payment system. So they're ignoring it. What it means is that in Vietnam's the 4th largest user of cryptocurrency as far as a developer and user, and it's a very big user and developer and consumer. Yet there's no defense. If someone steals your crypto, it's not an asset. It's not regulated. You can't pursue pursue that. There's been, I think, one court case where someone's pursued, but otherwise it's not an asset. You've got nothing. So really understand the market, understand the restrictions, understand the limitations, and you don't just jump in with a great approach. You've really got to not just, you know, think and learn. You've got to think through on a different level than it would be in other markets, because if you're developing crypto and you've got a whole bunch in a wallet and someone steals it and your whole business is gone with no recourse, it's not a good position to be in.
Yeah, I think for Indonesia, yeah, I think I echo my partner comments that market research is key. Indonesia offers a very diverse environment, and to succeed, I think comprehensive market research for specific fintech areas should be done. You know, like whether that's payment, lending, crypto, wealth, insurance, or SaaS. You know, identify the key players, competitors, and partners to shape your strategy. Thank you.
Thank you, Karim, and thank you everyone for your expert insights. I think we can conclude our session for today. So I appreciate again the panelists for sharing your practical understanding of the markets and the specific regulations that you look after in your markets. Thank you again, Matthew, Thomas, Blair, and Karim. And as well, thank you to the attendees for paying attention, for keeping focused, and hopefully we can help some of you with your fintech initiatives in the market in Vietnam. We'll be sending out a follow-up email shortly with the recording, with specific details, presentations, and other call to action for engaging with the partners in this session here. And if you're looking at other fintech potential opportunities across Asia, we'll be present at the Singapore Fintech Festival. We'll be present at the Hong Kong Fintech Week early November, end of October. And we're happy to engage with you within this exciting sector, and as well others that may be of interest to you. So I'll conclude the session with these words, and thank you again for participating, and wishing you a good rest of the day.
Thank you very much.
Everyone.
Thank you. Bye-bye.
Thank you, everyone. Bye-bye.